Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's episode of the Tax Talk with AJ. The show is brought to you by Science CPA Services, a full-fledged, complete professional accounting firm with multiple locations in the state of New Jersey. They've been assisting clients over 25 years and they can assist you with any personal or corporate tax matters. And besides that, if you are the owner of a small to mid-sized to even large size business, they can guide you to have a virtual CEO, virtual CFO. They can help you with the payroll services, bookkeeping services, a full-fledged accounting and a tax firm which has very high standard reputation in the nation, and they can help you no matter where you are. They can be reached at 908-888-8900. That's 908-888-8900. Visit their website, sciencecpaservices.com. The Tax Talk show every week, same place, same here, brings you all the latest that you really need to know when it comes to taxes. Taxes is a very wide subject. There are so many things to discuss, and Mr. AJ Kumar of Science CPA Services brings all the latest information that you really need to know when you file your taxes. So once again, to file your taxes and to get consultation, you can contact Science CPA Services. And with that note, I'd like to welcome Mr. AJ Kumar to the show. AJ, good to see you, and thank you for being part of the show.
Thank you, Sanjeevji. Thank you for the kind introduction.
You're very welcome.
Tax is a library, not a book. In this show, we try to cover one topic and we try to simplify it for our viewers.
Yes.
And we try to talk about one topic, one episode, to see how does it matter to you. What can you do about it? And from that perspective, today we are talking about R&D tax.
R&D taxes, and I just want to point out, AJ Kumar is a CPA and MBA with Science CPA Services, and every week he gives all the latest information and a guidance that we really need to know. R&D जो है research and development, it could be research, could be development, or could be together, but it is actually a very important tool for most of the industries. Not only the companies who are in the manufacturing, that's a myth, but not only the manufacturing, but any even service company, retail company, they have research and development department. And how does the expenses in R&D implies to the tax return, and what are the do's and don'ts of R&D?
Absolutely, Sanjeevji. And you said it very well. A lot of people feel, a lot of small businesses feel, it doesn't apply to me. And we keep reminding them, IT consulting company, they have their own people who are not working on the project, so they create an internal project, trying to improve something, create a timesheet system, create something new that helps you do your business better. Improvement is all R&D. AI, everybody is looking at AI now, that's R&D. Bio, pharma, medical offices, everybody, almost everybody can use R&D for their business. How do you do your business in a better way? That's all about R&D.
If somebody really does like a Google search and internet search to match their product and services and to see, who's the competitor, who's better, what we can do, this and that, and prepare internal report for the management, is that also part of R&D?
Well, that's more of a managing the competition. R&D is something that you are trying to create new. You have a concept in mind. You have several options around it. This can be done in this way, this way. Let's say the perfect example would be a medicine that you are trying to make. You have a cause that you are trying to fix. You have a problem statement that you are trying to fix. And now you have several ways to go about it. You can use the method of elimination. You have done this and it did not work. You tried this, it worked halfway. Then you parse it out. Oh, I used 4 of these approaches. So it's a method of elimination is something that you are trying to create new or improve something with a problem statement. It has to be something definite that will help your business. It has to be a business related problem.
Okay.
That's not sorted out yet, that you are trying to find something.
Okay, all right. So now, a government really gives a benefit to the R&D department and, R&D a task. There is a substantial amount of tax credit can be taken in the tax return. Let's have more info on that.
Absolutely. For all practical purpose, we use lot of R&D tax credit for pharma companies and for IT consulting companies. And if you take a step back, you wonder, pharma, I understand, but why, how? IT consulting companies, say, especially with this staff augmentation type of companies, not everybody is placed on the client side. You have 10 people who are not on the client side. So why don't you give them something to do, something to work on? They can try to find a new way of tracking the staff hours. They can find out a new way of tracking the time. Create a project for them based on your business requirement that they are trying to do something new. And then those hours, even their salary, part of the rent, part of the office expense, part of the admin fees, they can all be pushed into some sort of R&D expense. And then based on certain computation, you create a credit out of it. And that credit can give you the tax advantage. And you say, how much can I get?
Okay.
So you can get a dollar for dollar, meaning if your R&D tax credit is 10,000, up to $10,000 of taxes are waived for you. Your R&D credit is 50,000. Up to $50,000 of tax liability is waived for you. And you say, how much can that be? For a small business, hear me out, 250,000, a small business is defined as less than 250 employees. 250,000 of R&D tax credit. Well, 250,000. How much for the large business? $2 million. And that's not a lifetime, per year. So the unfortunate part is a lot of small businesses, people who can use this money, they don't know how to claim it. They don't know anything about this credit. A lot of IT consulting company who genuinely qualifies for this credit are not using this credit.
Okay, so that means government is really kind of encouraging companies to do more and more R&D, to be innovative, to come up with a new product or do research and basically stuff like that. What is Section 174 related to R&D?
Absolutely. So Section 174 is less about R&D credit, more about R&D expenses. And the difference is at a high level when we talk about credit, tax credit. Tax credit lowers your tax liability dollar for dollar. Expense, on the other hand, lowers your taxable income. So Section 174 mentions that all the R&D related capital expenditure has to be put on the balance sheet as a capital expense, and then it has to be amortized over a certain number of years. So if this R&D expense happened in US, domestic R&D expense, then you need to amortize it over 5 years. If it's foreign country, did outside the US, then you have to amortize it over 15 years. Take an example. Let's say you invested $500,000 in US as R&D expenses. Then you take this $500,000 and divide it by 5 years and take, let's say, give or take $100,000 in this example as an expense. So you lower your taxable income by $100,000. So you pay taxes on the lesser net profit. On the other hand, if you were claiming the credit around it, and let's say the credit turns out to be $25,000, then this $25,000 lowers your tax liability dollar for dollar.
Okay, so Section 174, if I understand correctly, there's a purpose to R&D, there's an amortization, and I believe there is a scope also, because it allows the wide range of scope in the sense, let's say if they want to have a software upgrade, it's also part of Section 174. That's
Absolutely.
all included.
So all of that, any expense, you can put on the balance sheet, investing into a new software system, upgrading a new software system, creating customized software. This is all part of Section 174. You capitalize it, put it on the balance sheet, you use the mid-year theory. So the first year you use half of 20%, but going forward every year you use 20%, meaning 5-year life. If it's domestic software, domestic implementation, if it's done outside this country, then you use 15 years amortization period.
All right. So what are the key differences? When I talk about key differences, immediate deductions versus amortization.
Well, take a step back. Let's say if you invested $100 into the business. If you take immediate deduction, it means you lower your taxable income by $100. When you think about the amortization means I invested $100, but for this asset, I will have 5-year usage. Let's say when you implement a new software, new technology, new computer system, it doesn't really fail in the first year. You hope it will last for n number of years. So that the government has came up with this theory that if it's a domestic investment, you can go up to 5 years. So you invest $100, every year you get the benefit of $20. That's amortization. Direct expense means you invest $100 and you lower your taxable income by $100 right away, immediately.
Okay. One more point to cover before we go into the break. What are the forms for this matter, and what are the filing requirements?
Well, if you are using R&D credit, you typically file 6765 form. The best part is there are companies specializing in this form 6765. They will do this computation for you, they will give this form, and you just need to fit it in your tax return. So 6765 form is what's created, what calculates the R&D tax credit. On your personal tax return, you use form 3800 to claim the tax credit. But again, 6765 is computed separately as not a part of the tax return, and there are a lot of third-party companies that you can pay a couple of $1,000s, few $1,000s to have this whole R&D tax credit claimed, and they will take the responsibility. You are paying them to do this computation. They will take the responsibility if IRS ever come behind you, come back to you, why did you claim it? How did you claim it? They are responsible for it.
Okay.
They will do the computation for you.
Very interesting. With that note, folks, we're going to take a short break. When we come back, there's more on R&D coming your way in this episode of the Tax Talk with AJ. Stay with us. Welcome back to the second half of the Tax Talk with AJ. As I mentioned earlier, this is a show brings you all the latest that you really need to know when it comes to taxes. As a matter of fact, you don't need to go anywhere to know more about taxes. Just watch our show, and if you have any question, reach out to the sponsor of the show, Sai CPA Services, a complete professional accounting firm, and they're on-hand, knowledgeable, experienced CPAs can guide you and assist you in the right direction with one phone call, 908-888-8900. You can book an appointment in person, over Zoom. Anything is possible. And remember, when it comes to taxes, no question is a silly question. So do reach out to Sai CPA Services for all your taxes needs. Today, we're talking about R&D, Research and Development, Section 174, and how it applies to you if you are the owner of a business. Now, AJ, in the first half, when you mentioned 0 to 250 employees can get up to $250,000 in a tax credit for R&D, correct? I heard that correctly. So when you say 0 to 250, that means if company has a one employee, it still qualifies for $250,000.
Absolutely, that's the maximum though. 250,000 maximum per year.
Correct.
The computation depends on how much actually you spend. Then there is a base criteria. You claim 3% up to the base research, and then anything over the base research for a small business is 15%, and small is defined as under less than 250 employees. For large employers, over the base research, up to base research is 3%, over the base research is 10%. But for the large employers, over 250 employees, you can go up to $2 million per year in R&D tax credit. Of course, you have to have the tax liability. Take an example. Let's say you qualify for $100,000 of R&D tax credit, but your actual tax liability is only $30,000. So you claim $30,000 and the $70,000 is suspended or carried forward for future years. And how long can you carry it forward? Forever. There is no limit on the number of years.
Okay. There's no limit like 3 years, 5 years, 7 years, nothing like
well,
that.
there is a limit at how many years you can go back. Let's say you are watching our show and say, holy cow, I forgot to claim the credit. Can I claim it now? Sure. You can go back 3 years. If you have filed the taxes and you have shown profit, you can go up to 3 years to see if you qualify for R&D tax credit, how much you qualify for, and how much money you can get back.
Okay. So now, when it comes to R&D tax credits are available for all organizations who are engaged in some kind of product development and the services, in their process, right? Now, based upon your experience and the knowledge, because you file hundreds of thousands of tax returns, which are the main companies that they can use R&D, and in case if they haven't used it, which companies, organizations rather, that you recommend, you suggest that these are the organizations in the top list that they should have R&D in their companies? Well,
many, almost everybody. So the low-hanging fruit is pharma companies or the IT consulting company, staff augmentation type of company, VC funded. VC funded means you are working on a new concept. AI related companies, iPhone app type of company. You're trying to solve a problem. You're trying to create a system, a new system that you think will create more money for your business. So the application is there. Any type of business can use it. You can be an LLC, S Corp, C Corp, all sorts of business can qualify for this credit, as long as there is something new that you are trying to develop for your business or to solve a business problem, as long as there is a proven concept around it, or you are using some sort of method of elimination. You have a defined goal to achieve what you are trying to achieve, and then you have proper methodology around it. Meaning general maintenance is not R&D. As we were discussing in the first segment, if you are trying to find out how much your competitors are charging, or if you are trying to write policies, the HR policies, that's not really research. It has to be really research and developing based on that research something new. That's R&D tax credit.
All right. So here's just a simple question so that our viewers can understand a little more. This R&D, obviously, as a part of that, if you are, like you said, trying to find a new product for your business and everything, you do research and then you claim the credit for it. What if you never ever manufacture that product and it's never becomes part of your business? You're still allowed to claim R&D tax credit?
I will answer that question, but take a step back. The worst part is not that you were not able to find the solution. Worst part is that you found a solution and it was never used. So a lot of R&D, this research and development happens. They have a solution. They find a solution that's really, really applicable, but they run out of funding, or they just don't know the problem that can solve. Penicillin. Who knew how the penicillin was discovered? Yes. It was sort of a flop idea. Yeah. Or 3M's post-it notes. If you look at the post-it notes, they were trying to develop something that will stick forever, but it was not sticking. But it created a new product that's a billion-dollar business now. Yep. So a lot of times R&D is about finding the solution and finding the applicability of that solution. But to answer the question, even if you are not successful in finding out what you wanted to find out, what you thought you were trying to find out, R&D is still R&D.
Okay, so now it leads me to another question. When we file a simple tax return, and you always say that, listen, whatever expenses that you're going to be claiming in your itemized, category, make sure you save the receipt, make sure you do this, make sure you do that, and so on and so forth. When it comes to R&D, what kind of proof government would want to see when on a tax return R&D tax credits are mentioned?
Well, the first step first, we don't want people to be lying about it. So there has to be proof of payment around it. The most important part is you can give us all the theory, you can give us all the ideas around it. But what from an IRS perspective, what we are more interested in, did you really invest this money or not? Did you really spend this money or not? So we have to see the proof of payment around it, the check going out of your bank account. Then we'll see who are doing this R&D, what's their qualification. Are you having the HR manager doing the R&D for your AI application? That doesn't seem right. So it has to be kosher. You have to be doing the right thing, and all these things are going to be checked if you get audited.
And then you also need to have the reports maybe prepared if it's a monthly or quarterly report
so the
as a backup.
Remains on you. It's your responsibility to justify that the expenses were real, they were paid, and the research is really research. You're not making up the whole story.
Yes, okay. So you got to have some kind of proof backing up the research. Now, many times companies may not pay to consultants. Many times company may pay their in-house consultants or the employees.
All the time. And the best part is, let's say if you have 10 employees working on R&D, and in total you have 20 employees. You can claim half the rent, half the HR manager salary, half the admin expense. In this example, because half of the expenses are related to those 10 employees who are doing the R&D. So it's not just the R&D staff. Any expenses directly related to that R&D staff is also a claimable expense.
All right. So now, so that clarifies that matter. Earlier you mentioned that you can go back up to 3 years when it comes to R&D tax credit, and that part is also done. R&D is basically for all kind of organizations and everything else, and then you must have some kind of backup, some proof, solid internal reports, management reports, or payments to the outsiders for whatever research that they've done. Now, my question to you is that when R&D is already mentioned on the tax return, what are the chances of that R&D part being audited by IRS?
It's not a loophole in the sense that it's not something that you are trying to do illegally. It's a legitimate form, it's a legitimate benefit. So what's the probability of you getting audited if you claim the home office expense? What's the probability of you getting audited if you claim section 179 car expense, car depreciation? So it's like anything else. As long as you have the right proof, as long as you have the right intent behind it, you don't need to worry about the audit. But audit can happen for anybody. Audit can be random. And audit depends on your income situation and what other things you are claiming. Just by having the R&D credit does not really increase or decrease your audit probability.
It doesn't really increase or decrease the chances of audit just because you have the R&D.
That's right.
R&D ones. Okay. So now, while we have discussed this and everything, is there anything when it comes to, the criteria or qualifying research expenses?
Absolutely. In the new government, I want to remind our viewers that there is a big push to make in America. Why not start with R&D? If you are doing the R&D in America, even if you are choosing the amortization method, you can claim that expense over 5 years. Again, if this R&D, if this research is done in a foreign country, you have to put it on the balance sheet and claim it over 15 years. So the tax benefit is going to be much lesser. There is a new push from the government to have a lot of these things done in US, make in America. And there will be a lot of new tax benefits that we'll be discussing in our next episode that are coming up with a new system, with a new government for doing things here in America.
Okay. All right. So now we start with R&D section 174 that we started with, right? So now, let's just go over through quickly the cost which are under IRC section 174. Salaries and wages, that
Absolutely.
definitely needs to be in a consideration. Then you have supplies and materials that
Anything,
also needs to be
salary, supply, admin expenses, office rent, anything related to that group that is doing your R&D, including their benefits.
Overhead expense, future
Absolutely.
expense.
Overhead expense,
Right.
Admin expense, HR manager, rent.
Okay.
It's all fair.
Okay. And what entities, as we mentioned, does it have to be corporation or LLC can also do
LLC,
R&D?
flow through as corporation, partnership, C corporation, all type of entities are allowed to have R&D expense. The focus is on the R&D, not on the type of entity you have.
Okay.
So all type of entities qualify.
Now, so far, throughout this episode, you have given so much information on R&D, and that all seem to be really good, very, very positive information that somebody would encourage to have really R&D done on their product or whatever they want to do. Since we have less than 2 minutes left, is there any downside or is there any alarming matter that you can share with us when it comes to R&D?
Well, yes. I'm glad you asked, Sanjeevji. The worst thing you can do when it comes to the R&D tax credit is not knowing about it. If you don't claim it, then you lose everything. So understanding section 174, understanding 6765 section is very important. A dollar saved is a dollar earned. So if you have an IT consulting company, if you have a pharma company, if you have an AI based company, if you are into new technology, you owe it to yourself to learn more about R&D tax credit.
Okay. So that says it all. Once again, folks, the show is brought to you by Science CPA Services. Tax Talk with AJ every week right here on the same place, same time. And this is the show, gets you all the tax-related information that you need to know. Now, January is over. We are into now month of February. Time flies. We only have till April 15. Do not wait that long. Whatever your tax-related documents and matter is, and just reach out to Science CPA Services, book an appointment, have them review your tax returns and see how they can help you out, because they have the highest satisfactory rate in the nation. Anywhere you are in the USA, Science CPA Services will help you out. Once again, their phone number is 908-888-8900. And with that note, I'd like to thank AJ for his time and advice right here, valuable advice in our show. AJ, thank you.
Absolutely, my pleasure. Thank you.
Thank you very much. And until we meet again, same place, same time, I'm Sanjeev Pandya, wishing you all happy and tax-free days ahead. So long.
Thank you again.
you.